our leaders, our government are kind of in this teenage state right now. There's this long history we can rely on for a more mature view of how things work.
We have been experiencing an unfavorable economy these days, from rising inflation to escalating geopolitical tensions. Since the market started showing signs of declination, investors like Michael Burry have been predicting how things would go. But things are now getting worse because Michael Burry has just exposed the U.S. government for the worst scandal. Remember when Burry predicted the 2008 bubble? People thought he went insane. But with the look of things, the housing recession is just nothing compared to what Burry is seeing right now. Just months ago, he predicted that stocks would keep falling and that we should be careful of our investment plan. He has, however, noticed how the U.S. government is running this, and he's so disappointed that he had to expose the government for deceptive practices. What was his claim? How has the government been deceptive? Well, that's what we'll find out in this video. So watch the video to the end because it's going to get interesting, folks. Without wasting any more time, let's get started. Michael Burry just exposed the United States government, saying the Federal Reserve is lying. Burry claimed the Fed was supposed to pull back tens of billions of dollars out of the economy starting on the 1st of June 2022. But this didn't happen. You should know it requires a whole lot of boldness to make this claim. Well, as expected, Burry backed up his claim with undeniable evidence. If you check through the New York Fed website starting by June 1st, you would realize that the Federal Reserve claimed they would sell $47.5 billion worth of securities monthly, including $30 billion worth of Treasury bonds and $17.5 billion of mortgage-backed securities. This sounded quite believable, but when Burry looked through the Fed's website, he noticed none of these happened. They were not selling the amounts they claimed to be selling. Michael Burry tweeted, "Drugs are hard to kick. Fed was supposed to sell $30 billion of treasuries and $17.5 billion of mortgage-backed securities per month starting June 1st. Quantitative tightening. During June, mortgage-backed securities holdings rose almost $3 billion, and treasury holdings fell less than $10 billion. This didn't speak well of the Fed. Instead of selling $30 billion of treasuries in June, they only sold below $10 billion of treasuries. Awful as it seems, the Fed bought $3 billion worth of MBS instead of selling $17.5 billion of mortgage-backed securities, or MBS in short form. For this reason, Burry claimed that the Fed appears to be deceiving everyone right in front of their faces. Also, the U.S. government does not even want to believe the economy is crashing, even when it's so obvious that the U.S. economy appears to be entering a recession. The White House does not want you to think that, and they described a recession as a decline in the labor market, consumer and business spending, industrial production, and incomes. This is ridiculous because everyone knows that the economy is clearly declining. What Burry is saying in essence is that the White House is only deceiving people with the wrong statistics, and they want to frame individuals into believing everything is right with the economy. The White House also claims that inflation-adjusted income, or real personal income, is an indicator of economic stability. Not only is Burry aware of the inaccuracy in this statement because it is clear that credit card debt is skyrocketing to pay for increasing prices. The White House also pointed at the country's unemployment rate, which they claim is quite low as of now. This is another deceptive strategy, according to Burry. He claimed that fewer people are participating in the labor force as people are now leaving by not looking for jobs or by simply retiring. Burry believes that the unemployment rate only counts these actively looking for jobs. Since the Fed announced it would raise interest rates, the market sentiment failed. But recently, individuals have started to become bullish once again. Michael Burry believes that such silly behavior indicates that the crisis is far from over. The fact that people have become bullish indicates we are simply in a dead cat bounce. He also said that such speculation had inflated past bubbles but eventually disappeared every time. The boss of Scion Asset Management also depicted that 13.48% of U.S. stocks closed above their 200-day moving average. When the market went down in 2009, this rate was 1.2%. In 2020, it spurred to 2.8%. Burry also expects stocks to drop significantly lower before bottoming out. He predicted in May that the S&P 500 could drop as low as 1,900 points or another 53% over the next few years. This is based on how we've experienced past crashes. He has also dismissed the rebounds in stocks this year as bear market rallies, with temporary reprieves along the route to an unavoidable disaster. The Federal Reserve's interest rates have also led to a bleak financial landscape. Remember that Michael Burry predicted that there would be a massive stock market crash very soon. In fact, he's predicting a crash on the scale of the dot-com bubble and the Great Recession that happened in 2008. If things are not adequately considered, many investors will suffer a huge loss. If you know Business Insider too well, you will know that the American Financial and Business News website is known to bring out claims and financial updates. In Michael Burry's thesis, the company misinterpreted him in different ways. Burry had to call out Business Insider for misinterpreting his thesis. An article presented by the company made it seem like Burry was bullish when he actually wasn't. The paragraph pointed out many investors have been dumping stocks, cryptocurrencies, and other assets in anticipation of further rate hikes and a tighter money supply. However, Burry expects the inflation threat to diminish gradually and the Fed to loosen its stance and begin cutting rates and ramping up bond purchases again. This paragraph implied that Burry was bullish because he expected inflation to reduce. This was really out of point, as that was not what Burry meant in his thesis. His deflationary thesis does really mean it was bearish. We should also know that the Fed cutting rates create long-term inflation. Not only that, but the drop in prices also means that corporate profits will suffer. When Business Insider noticed this misconception, they had to totally reverse their words by talking about how Burry's thesis is bearish. This could be funny and at the same time unprofessional. It's an article disaster and completely misinterprets Burry's prediction. Burry didn't take this lightly, and he depicted that the mainstream financial media is indeed awful, as all they always do is confuse readers and never expose any blatant manipulation. However, most companies have predicted that their future quarters will be a total disaster. This basically means that the companies have been shocked by what's coming. Burry is saying that the recent earnings reports might seem great, but the next ones are going to be awful. Another shocking thing that Burry revealed was the fact that Joe Biden sold oil to a firm that Hunter Biden was invested in. He tweeted, "So Biden sold 950,000 strategic petroleum reserve oil barrels to Sinopec, a Chinese oil firm. His son, Hunter's private equity firm, was a $1.7 billion investment in Sinopec Marketing, a wholly owned subsidiary of Sinopec." And I have to read the Washington Free Beacon to get the story. "We are aware that there's no alignment with the long-term success of the United States between the White House and the Fed's actions. However, this is nothing compared to the world war Russian President Vladimir Putin unleashed on Ukraine. Tensions are rising between the West and the East as the Ukraine war continues. In preparation for a world war, CEOs in the U.S. are moving manufacturing to the U.S. The Fed is hiding this activity, and Burry is spilling it all out. In fact, the deceptive practices are endless. We can only wait to see how it turns out." Well, that's the video for today, guys. If you enjoyed it, do well to subscribe to our channel and give this video a like. Thanks so much for watching, and we'll see you in the next video.